Hello everybody, welcome to Groot's Technical Analysis. Today I'm going to go over trend lines and support and resistance. What are trend lines and what is support and resistance? Very simply, a trend line or support and resistance line is a line where the price will either react as support or resistance, meaning it will go down to the support, use it, and then turn back up and go in the other direction. If it is resistance, it will be hitting the top of a trend and then coming back down. That would be resistance. Now, how do you draw trend lines? Well, trend lines and support and resistance are, for one, very subjective. There is no real static trend line or support and resistance. Why? Because there are so many wicks and candle bodies, and people are always wondering, well, do I draw from the candle body? Do I draw from the wick? And you know, there is kind of no right or wrong way to do it, as long as you can just get as many candle touches as possible. So for example, here would be a trend line. So I would just start my trend line down here at the bottom and kind of just get it to touch the very bottom of that. And you can clearly see that, you know, this is Netflix, and on a weekly chart, this is its overall uptrend. And so what I would also do is maybe add one at the top. And you can kind of see that we have a nice channel here, and it goes kind of outside of it sometimes, and it could come down underneath it as well. For example, if I started it and went here, you can see we're underneath it here, underneath the trend line here, but above it here, and a little bit above it here. So it's not something that you can use as a definitive source of support and resistance with like super tight trading, because it can overshoot and then come back up inside again, just like you can see here at these extremes. Now, one way that I like to trade things like this is when it does come outside the extreme, I could take a long position outside here rather than trying right on the support, which you could see did have a reaction. You just wouldn't have wanted to hold it very long. Why? Well, the 821, as we've seen in previous videos that I've made, is still bearish. So while we can play the support there for a bounce, it's kind of like a shorter term trade, right? We don't want to hold on to that too long if we're going to try it. But when we get outside the extreme of the trend line, this can typically become a place of interest. When we combine this with other indicators is when we get much stronger signals. For example, if we used, you know, a Fibonacci retracement tool here, and we drew this up, we can see we're kind of getting some support at the 382. However, that's not exactly perfect either. So while technical analysis can be very useful for trading and investing, it is better used for longer term investments. Why? Well, we want to buy the lows and we want to sell the highs, right? And it's very difficult to nail bottoms and nail tops. However, these things can help you get very, very close. So what is support and resistance? Well, let's go into our current market and just kind of analyze what's going on here. So in order to draw some support and resistance, you want to start on higher time frames. And that is also as well with trend lines. The higher the time frame you're on, the more reliable data you're going to have. So in order to draw some support and resistance, I'll just come up here and maybe use a horizontal ray. And I can just start plotting where the extremes of these lines are. And so that would be one. And I'm going to change this to a solid line. And then I would probably put one right about there. And maybe one right here. And as you can see, I'm just plotting areas where I see where the candles or price action is reacting to more often than not, right? And you can see that these levels, even back from 2017, which is where Netflix just hit down here at the bottom recently. So now what I can do is go into some smaller time frames. So I think I would probably want to use this one as well, because that's an extreme wick. And then maybe something up in here, right there. And look at that, you can see that this previous price action all the way back here is kind of where we're reacting now. Now, again, it's not a perfect science, but you can clearly see a reaction here. And now we're back down on support again. And so if we zoom in, what do we have? Well, Netflix has an 821 bullish cross. So you don't want to use trend lines and support and resistance by themselves. You always want to have more indicators. And we can do that using, EMA strategies or Fibonacci retracements or moving averages. We can put on the MACD and the RSI down here to see what that looks like, right? And if our MACD and RSI are kind of venturing into bullish territories, which it looks like they might here on the weekly, then we can have a little more confidence that the momentum, because that's what these oscillators are going to show you, is the momentum is heading upward. And the further we get over 50 on RSI and the further we get above center here on the MACD, the more confidence we can have that this trend up here will continue. Right now it's kind of like, why? Well, here's our moving averages all up here. So these are all going to provide resistance. We also have these support and resistance lines that we've drawn, right? And if we draw a trend line somewhere, you can see that we found this support on a high time frame where we just go from the very bottom here. Oops, sorry about that. That is still support resistance. Right here to there, look at that trend line there. So we have all of these things kind of pointing to one place, right? Where this could potentially be a bottom. On a weekly chart, if you ever bought Netflix underneath this red line, which represents the 200-week moving average, you did fairly well, right? So as long as Netflix isn't dying, I don't think it is, but you never know, then I think we'll be okay long-term investing in something like this down here. You certainly don't want to buy the tops. This is when most people will be buying things, is way up here. Why? Because that's when the most hype is generated. Oh, the bull market, let's buy everything, right? No, if you're going to be smart about your investing, you want to buy down here, and then you want to be the person selling up here, right? In hindsight, of course, that makes sense. But in the thick of things, when the market's rolling and everything's bullish and everyone's going crazy, people just hop on the train until one day this happens, right? And it's just inevitable. It's going to happen eventually. All of these people back here who invested are going to take their profits. But we can be smarter. We can draw some lines on a chart. I know most people think that, technical analysis is some sort of self-fulfilling prophecy, but it does follow a pattern. Typically trends are in this incline here, like a 45-degree angle. And we can draw lines on a chart in order to help us understand when it's a good time to buy and when it's a good time to sell. And that's how you make money. And we're all in this to make money. If you're not, I don't know what you're doing this for. So I hope you like this video. Support and resistance, trend lines. I have a Discord channel where we constantly are learning every single day in the DeFi Dojo. You can find links for that in my description on YouTube. And I also have a Twitter account where I post educational content all the time. So thank you for watching. Hit that like button, subscribe. I'm going to be making a bunch of videos in the future. So I look forward to seeing you again soon. Thank you.